As the countdown to the Bitcoin halving ticks away, the crypto world gets ready for a seismic shift in Bitcoin's value. Or perhaps this shift has already begun. SimpleSwap has identified key prospects for miners and made forecasts on navigating the Bitcoin landscape in 2024. What exactly is BTC halving? Think of it as Bitcoin's grand event happening every 4 years, where the reward for miners gets chopped in half. This move isn't just a casual adjustment, it's a strategic play to keep Bitcoin rare and limit inflation, maintaining its fixed supply of 21 million coins. Historically, Bitcoin halvings have been game changers, triggering price fluctuations that send BTC to new all-time high levels. Following the halving in November 2012, Bitcoin experienced an outstanding price surge of approximately 8,000% in the year following the event. Similarly, the halving in July 2016 led to a substantial price rally, with Bitcoin's price surging by approximately 284% in the year following the event. Once again, the reduction in the rate of new Bitcoin issuance contributed to upward pressure on its price. The most recent halving, which occurred in May 2020, also resulted in a notable price surge for Bitcoin. In the year following the 2020 halving, Bitcoin's price increased by approximately 538%. The historical patterns observed after previous Bitcoin halving events suggest that there is potential for further price growth following the anticipated halving in April 2024. If past trends repeat themselves, Bitcoin could experience significant upward momentum in the months following the halving. Given the historical precedent, there are indeed possibilities for Bitcoin to surpass its previous all-time high price in the aftermath of the 2024 halving. But what do the experts say? Crypto analysts and experts are generally optimistic about the prospects of Bitcoin following the halving event. Rob Chang, CEO of Gryphon Digital Mining, highlights the expected price volatility surrounding BTC both before and after the halving. He notes that while BTC prices may experience fluctuations in the short term, they typically trend higher in the months following the event. On the other hand, Richard Baker, CEO of TAAL, Distributed Information Technologies, offers a word of caution regarding the potential impact of reduced mining activity post-halving. While the increased scarcity of BTC could theoretically drive up prices, Baker suggests that a decline in mining activity could also lead to price decreases in the short term. Experts from CoinShares have conducted assessments and forecasted that after April 2024, the average cost of mining 1 BTC will be $37,856. In the report, CoinShares investment strategist James Butterfield noted that the main challenges for miners at the moment include commercial, general, and administrative expenses. These aspects will likely need to be reduced soon to sustain mining operations. This also applies to energy consumption. It's expected to decrease to an average of 10 watts by mid-2026 and is currently at 34 watts. According to experts at Galaxy Digital, it's anticipated that approximately 15 to 20% of Bitcoin mining capacity will become inefficient following the halving event. As a result, miners may opt to decommission less efficient mining equipment and focus on utilizing the most effective tools available. This forecast is based on the projected price of Bitcoin hovering around $45,000 post-halving. Some experts suggest that Bitcoin could reach its all-time high even before the halving event. According to a report from QCP Capital, BTC may hit its ATH as early as March. This bullish sentiment is being driven by increasing demand for BTC spot ETFs and call options, particularly those with strike prices ranging from $60,000 to $80,000. Additionally, on-chain analytics platform CryptoQuant shares a similar outlook. They believe that Bitcoin has the potential to reach $150K in the medium perspective. Crypto influencers are also expressing optimism about Bitcoin's prospects. Arthur Hyers, co-founder of BitMEX, has shared his bullish outlook, anticipating that BTC could reach its all-time high near $70K this year. Additionally, investor and entrepreneur Robert Kiyosaki recently shared his BTC price prediction via Twitter. Kiyosaki expects Bitcoin to reach $100K by June 2024. According to SimpleSwap's prediction, Bitcoin has the potential to renew its all-time high and reach $100K during this summer. Our forecast is based on several factors, including the continuous influx of fresh funds from Bitcoin ETFs, growing interest in Bitcoin and cryptocurrencies from retail investors, increasing on-chain activity, and the traditionally bullish post-halving impact on the cryptocurrency. The Bitcoin halving mechanism is a fundamental aspect of the Bitcoin blockchain, ensuring its long-term functionality and scarcity. By reducing the supply of new BTCs, halving events serve to drive up the asset's price over time, echoing the scarcity dynamics seen with precious metals like gold. Projections indicate that the final Bitcoin halving will occur in 2140, at which point the maximum supply of 21 million Bitcoins will have been mined, leaving no more new coins to be created thereafter. Following the last halving event, Bitcoin miners will no longer receive block rewards and will rely solely on transaction fees as their source of income. This transition could potentially lead some miners to divert their computing power from Bitcoin mining towards more profitable ventures. However, the potential very high Bitcoin price will likely incentivize miners to continue processing Bitcoin transactions, thereby maintaining the network's security. The upcoming Bitcoin halving in 2024 is undeniably one of the most anticipated events in the crypto industry. With Bitcoin's price already surpassing the 70,000 mark, there are expectations that the halving could propel Bitcoin to new all-time highs in 2024. While the halving itself is typically viewed as a bullish catalyst for Bitcoin's price, it's important to consider a range of factors that could influence market dynamics, such as market sentiment, investor behavior, regulatory actions, and broader macroeconomic trends.